The world in 2022, intensifying political acrimony, the highest inflation in more than 30 years, COVID-19 still raging throughout the planet, and the stock market, it's not exactly predictable either. There wasn't even a 10% correction in 2021, yet market participants expressed the highest level of anxiety in years. What do you do when everywhere you turn, the corporate media is shouting market turmoil and encouraging fear? Where do you turn for honest answers and insights? Right here. CB3 Live. We exist to deliver accurate, sensible, and well-sourced educational insights on the world markets, global health updates, and the U.S. economic data that can and will affect your financial future. At CB3 Financial, we don't just manage your assets, we become one of them. Welcome to this month's CB3 Live. Good evening, everyone. Live from Nashville, it is Thursday, March 10th. I'm Charles Brown, Portfolio Manager with CB3 Financial. We are so glad you're with us tonight. Sometimes a picture tells 1,000 words, and the picture I have on the screen, which is the thumb for this program, does indeed tell 1,000 words. If you're new to the program, please subscribe to us on YouTube. Click the little bell so that you get updated when we go live or when we post one of our intra-month updates. You can also follow me on Twitter. Now realize when I tweet to Twitter and Facebook and LinkedIn, so you don't have to have a Twitter account. But I do this every single day. This last week was a couple times a day on some days, but I hope you'll follow me there as well. Those of you that have followed the program know that I cover a variety of topics every week. This week, most of these topics are going to be very truncated with the exception of the main thing that everybody's talking about, simply because that's what's affecting our portfolios and our psyche. If you happen to miss the program or if you want an intra-month update, I'm starting to do these now every couple weeks. I'm doing what I call a live update. I'm actually not live, but I do present what's happening intra-month, especially as we continue this volatility in the market and certainly with what's happening overseas. This is the story. Many of us on this call tonight, on this program tonight, did not or were not alive for World War II, but our parents were, and we certainly heard stories. But these two men have done more damage and wreaked more havoc in Europe than any others, with the exception of Joseph Stalin, which is a whole nother story, which we'll actually mention him later in the program too. But that is what is driving markets more than anything else now. And obviously this is a financial program, but I can't ignore the personal cost to millions of people, literally now over 2 million people that are fleeing the country of Ukraine. So even though it's a financial program, I just want to start with a few pictures. I'm sure you've seen some of these, but these are indiscriminate bombings by the Russian army, obviously orchestrated and controlled by Vladimir Putin. And these people did not want this. They just want to live in peace. And you've seen these scenes of innocent civilians being bombed. And of course, that puts all of us pretty angry, because if this were happening here, we would be outraged and scared too. We're separated from the rest of the world by oceans, and that's always been a natural protection. But it just hasn't been that way in Europe. And I'm going to give you a little bit of a history lesson tonight, one that I taught myself actually I have a consultant, one of my clients, and you've seen him on the show before, but Leo is from the Ukraine, and he helped me with some of the program preparation for tonight, and I want to thank him for that. But these buildings that are just getting bombed indiscriminately, some of these are residential, some of these are government buildings, but you're not seeing, airplane runways bombed here. These are where people are living. And I'm sure probably saw this in the last 48 hours, where a maternity hospital was bombed, and people out just trying to find any cover that they can to get away from the shelling. What I do find impressive is that these people, the Ukrainians, are sticking up for their country. They are not about to surrender. The president of the country quotes Winston Churchill saying, "We will never give up, never give up, never give up. We're flying the flag. We're building trenches and armaments and whatever we have to do." Ukrainians from across the globe have come back to their homeland to help defend the country. Obviously, this is the focus of what's going on in the world right now. This is a financial program where we're going to cover that, but it's important that we reflect on this and that we send our thoughts and prayers to these people, because even as we speak, even as I speak and you listen, the shelling continues. So realize there are two enemies here. Even though Russia gets all the headlines, Belarus is in partnership with them. You can see them on the map here. They're above, they're north of Ukraine. They're actually farther west. They touch Poland, as Ukraine does. But they are siding with, and they are letting basically Russia use their borders to infiltrate. You can see the red lines on the map to, conduct this attack against Ukraine. So Belarus is bellicose, word of the day, bellicose. They are a hostile country, and they are to be, in my words, disdained just as much as the Russians. This is what it looks like at this time. Everything that's red here are penetrations that the Russian army has made. They're continuing to move forward. They have talks every day that get broken off because what the Russians are saying is, we will stop when you concede everything that we want, which is basically never to join NATO or a 20-year window where you won't join NATO. You'll cede these two provinces, Donetsk, which you can see in yellow there, Luhansk, and of course Crimea, they already took in 2014 after President Obama had a meeting with Vladimir Putin, and the two of them said, "Oh, well, we'll never take it," and then just days later he did. So look back at 2014. But there's no stopping here, and that's why I pictured him with Adolf Hitler. Remember that in the late 1930s, Hitler said, "Oh, I just want this little piece of territory, and now I just want this." And then all of a sudden he's invading France, Belgium, the Netherlands, Norway, partnering with Vidkun Quisling there. Now, Norway is a NATO member, whereas Finland and Sweden are not. So we'll get into that later on too. But I think it's important to understand this history here because this has been going on for quite some time. This is called the Intermarium. Now, I know you can't see much on this map, but this is a map of the countries in Europe. Now you would think, well, is this 1900, 1700, 1500? It's actually from 1385. The point of showing you this here is if you can sort of make out the shapes of the countries, this continental warring has been happening for hundreds of years. 1385 is 130 years before the printing press. So that's how old this battle is for land. We don't have this in the United States because we're surrounded by water east and west and friendly neighbors to the north and south. After World War I, this, and I'll go back and just look at the size of the countries here. So this Intermarium took on a different look after World War I, and you can see the dark green are what were to be eventually the NATO countries. And look at the size of Poland, how large it was there. You can see what was Ukraine and what was Belarus there. And then this is what it looks like today. This is the modern Intermarium. And all of these countries in dark blue are NATO countries. And that, of course, is the rub with this dictator. He is believing somehow that this is a threat to the sovereignty of Russia. I think that's combined with Putin disagreeing with Stalin and Lenin that those lands should never have been given away. The Soviet Union should never have been dissolved. So he blames Mikhail Gorbachev for that as well. But that is what's in play here, is that Russia, basically their entire western border, if Ukraine were to join NATO, that would be an enormous threat to him. However, none of these countries have nuclear weapons. None of them. In fact, the Ukrainians gave up their nuclear weapons and gave them back to Russia years ago. Okay, so this is what the map looks like. So Ukraine is centrally located. It's a prime location. You're going to see in just a few slides why this is such a prize. But I mentioned earlier, The Donetsk, you can see the little slash lines there, Crimea, which Russia just came in and took in 2014. Again, why would he stop there? It's kind of amazing that nothing happened from 2014 to 2022. There are those of us out there that believe that that's because Donald Trump was in office and there was no way that Vladimir Putin was going to do anything like this with President Trump in office. Be that as it may, now it's happening, and I believe he wants to control the entire country. Now, he's taking the high ground, and of course I'm saying that with some bit of a laugh here. This is a quote from him in April 2013. Stalinism is linked with a cult of personality and massive violations of the law. That much he got right. With repression and camps. There is nothing like that in Russia, and I hope will never be again. That is a bold-faced lie. 9 years later, look at what he's doing. He amassed all of these tanks and armaments on the border, started doing it after Christmas, waited for the Olympics to finish, and then invaded after telling the world for weeks, oh, we're not going to invade. We have no intention of invade. Once a liar, always a liar. Once a liar, always a liar. This is Vladimir Putin and Vladimir Zelensky. These two men could not be more different. Putin rules from and I got this from my friend Leo, literally 100-foot conference room table where he's on one side and all his consultants are on the other side. Zelensky puts on a uniform because he wants to be one of the soldiers that's defending his country. I mean, the quality of the leadership here could not be more stark. This is a recent post, no pun intended, from the New York Post, actually was a tweet where Zelensky says, I've survived more than a dozen assassination attempts just since the Russian invasion. So he has said, just like Winston Churchill, we will never give up. We will never stand down. This is our country. They are not going to take it from us. And I think that the Russians were not planning on that. They're actually now the most sanctioned country in history. The numbers at the bottom are the number of instances of sanctions. Now, until this recent invasion, Iran, Syria, had more, or at least Syria would be neck and neck with Russia, but now Russia's just fully eclipsed that because basically the entire world has turned against Russia, which it should have. I'm actually pleased that it has happened. I wish it had actually happened a little bit faster, like day one, but nonetheless, we're 2.5 weeks into this, and we'll get to the end where we show you a lot of company logos that are participating in this. So the number of countries banning Russia from their airspace, this is an enormous amount of geography, although if you take Canada and Greenland, that's most of what's going on here, but all of Europe, realizing that, again, Norway is a NATO country. Sweden and Finland are not. They want to be, they just don't want to have to stand up to Russia, because Sweden actually does not border Russia, but Norway does, as you look up the map, touches up at the top there. So the Russians have managed to scare a good portion of Norway, partly because they don't want to be invaded, but partly because they have fuel needs that are desperate. The number of UN countries opposing this invasion, look at the yeses, look at the abstaining. What a shock. The Chinese and the Indians just couldn't bother to vote. And I think that's deplorable. The no, of course, comes from Russia, just one. All right. But everyone else basically is in unanimity condemning Russia for this action. What this has caused are 2.2. Now, this says 1.2 because this slide I managed to get 4 or 5 days ago. It's now up to 2.2 million refugees. Now, the refugees that were coming out of the Middle East, with Syria crossing in through Germany when Angela Merkel was the chancellor there, that is dwarfed by this. And you can see the likely paths of where they're going. So this is an enormous humanitarian issue, an infrastructure issue for the Western European countries. But rather than putting up their hands and saying, no, you can't come in, they are welcoming them. What this move has done has strengthened NATO, which I'm going to talk about here in just a moment. So if you look at this chart, this is the US dollar versus the ruble. All right, so it's just puttering along here for several years. And if you look carefully, I know it's a black background, but look at that enormous spike. And that's what happened. This is a weekly chart with the dollar versus the ruble. So the dollar just completely obliterated the ruble to the point where now 1 ruble is worth, that's not 8 cents, that's 0.08 cents, less than a penny. So you talk about inflation. How are the Russian people going to survive when their currency is worth nothing? All this bodes one question of one word. Why? Why would anyone do this? Just to be heinous? How much economic gain could be had to offset the harm, starvation, fear from your own people? And the answer is Russian leadership has a history of not giving a damn about their own people. You have to look no further than Lenin and Stalin. And Putin is the next generation. So as we search for reasons why, let's look at this. Why does Ukraine matter? Well, Ukraine is the largest country in Europe. It's the easternmost, but it's the largest, even larger than France and Germany combined. It's huge. Not only that, I'm not even going to run through every one of these because I covered some of this last month, or actually I covered it in the interim show that I did 2 weeks ago. But just scan your eyes over this. First in Europe in proven recoverable reserves of uranium. Okay. Second, 10th in the world in titanium. I mean, the list goes on and on and on. So there are massive natural resources in Ukraine, which naturally Russia would just like to claim as their own. All right. Not right, but that's what they want to do. But they're also an industrialized country. They're first in Europe in ammonia production, second in gas pipeline systems, third in Europe, 8th largest in the world in terms of installed capacity of nuclear power plants. And that's the concern. One of the very first events that happened was the surrounding and taking over of Chernobyl. Obviously, Chernobyl has been closed, but there is nuclear residue there that could be a significant harm to the people of Ukraine if Russia decides to somehow use that as a weapon, weaponize basically a closed nuclear plant. But there are many other nuclear power plants. This is actually a very advanced economy, but we don't think about them. And I'll just speak in referencing me. Maybe you do think about Ukraine, but we know so much about Western Europe. But there are actually some amazing countries, and this certainly is one of them in Eastern Europe. So crops, this is the third component of why Russia would want to be here. This is the 5-year production average. And again, you probably can't see all the numbers, but the big dots are showing millions of bushels that are produced: sunflower seed, barley, corn, wheat, all very saleable and exportable. The red lines are showing where Russia is trying to encroach and basically take over these resources. This is a resource-rich country, and that unfortunately is working against them because that's part of what makes them so desirable for the Russians. But these people are proud people. I've already shown you that. They want to defend themselves. Again, sometimes you just have to look at the colors because the numbers are so small here, but these are the exports. Russia's exports of 407 billion. Ukraine is a tenth of that size. So they're kind of like roughly the size of US and Canada, although their numbers are different, but the US is about 10 times the economy that Canada is, and Russia is about 10 times the size of Ukraine. So it would only make sense that they would love to add them back into what I think they're trying to do is recreate the Soviet Union. I'm sure they'll give it a different name, so it's whatever Vladimir Putin wants it to be. But that's not going to happen because once he does this, the next place to go would be the Balkan countries. And those 3 countries are members of NATO. And if any bombs go flying there, then the NATO planes come in and World War III starts. And obviously, no one wants that. At least no one with a sane mind wants that. No one in the West. And that's the fear, that's the volatility that you're seeing in our portfolios right now. And we haven't even gotten to inflation or the border or all the other political issues. This alone is what's driving the market right now. So Russia had 2 distinct but overlapping goals in invading Ukraine. The first was take control of the western borderland that gives them depth And they believe a big sphere of influence and all the natural resources that I mentioned earlier. The second, important, was to pit NATO members against each other, breaking off into factions. Maybe the Germans would stand with Russia, maybe the French would not. Why would the Germans stand? Because they need the energy supplied. But neither of these objectives has been met. Neither of the objectives has been met in my eye. This is a map of natural gas imports. Now, I'm laying this straight at the feet of Angela Merkel, the former Chancellor of Germany. When these issues were happening in 2014 and Putin played his hand, ignoring President Obama's threats, and walked right in and took over Crimea so that he could have a port on the sea. All right, that would have been the time for Germany to say, maybe we need to look at other sources of energy. If you look, you see the Nord Stream pipeline. There are two of them. The primary one coming down in the middle there. You can see the little hash lines. Sort of Germany did stop production on, or did say we're not going to continue accepting any gas on this line, basically choking some of the exporting capacity of Russia off. That's a start, but you see how many lines feed in, interestingly enough, through Ukraine, through Belarus, through Turkey. There's a lot of exporting going on here of energy from Russia. Now, if you're a Western European country or Eastern, aren't you thinking, maybe we need to dial up Washington, see what we can do about getting some fuel there? I hope that whoever's in office, whenever all this shakes out, realizes that we could have a phenomenal export industry of refined crude oil, gasoline, and natural gas right there in Western Europe. Because there's not a leader there in Western Europe that wants to feel like they're going to be safe if they continue to have Russia as their main provider of energy. It's just not going to happen. Who are the top traders? Now, I haven't checked here in the box here. I'm going to do this in a minute, but I'm going to give you guys a chance here. So the top traders with Russia, these are the American states, right? Illinois, number one, only 650 million. It's basically one company with a little bit else. Who do you think that company is? So I will tell you what we export to them are the ability to do farm production, but also to do building and road construction. So these are big moving equipments. So type in the chat. Let's see if you guys get this, and give me just a moment here to check. Hi, Leo. Thanks for being on here. Intermarium means between the seas, in this case, between the Baltic and Black Seas. Thank you, sir. That's why I have a knowledgeable consultant here. Photo Putin at a long conference table. Google this phrase to see the image. Yeah, thank you. Leo mentioned this to me this afternoon. So, hey, Rex, good to be with us. Good to see you with us. Andre, good to be with us here. And Leo and Andre, you guys have some commonalities there. Leo's also Ukrainian American. Yep. Okay. See, Saturday, my birth, Kiev today. I know. I bet it is, Andre. We feel for you, buddy. We really do. All right. I know we're on a 25-second delay. So is there anybody that knows what company is the number one exporter to Russia? Just seeing if you can follow it. All right. I'm going to type it in the chat, and I'm going to put the ticker symbol, and then you guys can figure out what the company is, I think. Okay. All right. We'll see how that happens. Those exports have been shut down. Okay. Caterpillar. Very good, Dr. J. I think that the timing we just caught up there. So yes, good for you. Dr. J gets the award. Trade with Russia has been pretty steady, but look at that. It's under 7 billion. Now you would think CF Industries, good guess, Debbie Domagowski. Hello, I think from South Dakota, Deb. Good to see you. Pretty steady. Rose a little bit last year. This trade with Russia, when I pull this graph next year, is going to plummet, as are many, many countries around the world. So how important is Russia to our exports? People say, we're concerned. Maybe we're not playing hardball enough with Russia because we're afraid we're going to lose the exports. Folks, look at this. We export $300 billion a year to Canada, $270 to Mexico, and then it dwindles down. Ukraine and Russia is just a rounding error. So we are not an export economy. I've talked about this in other episodes of CB3 Live. Russia, China, well over 50% of their economy. I think it's more like 65% for Russia and 75% for China. The U.S., 31 to 32% of our economy depends on exports. We are an internal self-sufficient country for the most part. And I think wherever we were with energy with the previous administration, we'll be returning there regardless of who's in office, because Americans are going, you know what, we never want to be dependent on anybody. And we're not dependent on Russia. You saw the math earlier. But we want to be self-sufficient in every single area that we can be. And that's a positive for sure. So who are Russia's most important oil export partners? Number one, no surprise, Canada, the Netherlands, Germany, etc. We're less than 1 billion barrels a year. Okay, 0.95. We're at the end of that. So this is not a big deal. It's mostly a symbolic gesture to stop all exports from Russia, but we are making a statement, and it does force us to find other places with partners that we can trust and that are not committing massive civil rights, abuse. So I do think that we have to recognize that this is causing anxiety. And again, the point of my program is not to highlight this anxiety. It's to give you the peace to know that we have been here before. In the next section, I'm going to talk about how the markets perform during wars. But I thought in this opening section, which is again longer than normal, that it's just important for you to realize this will pass. This will pass. And I think more quickly than many of us believe, as in maybe another month or so. Okay. So this invasion, what percentage of the people say these are Americans now, significant sort of stress? 87%. Okay. That this has been a constant stream of crises. Well, that's partly because you're watching the news too much. So I would encourage you not to do that. Come back to this video, come back to my, every other week's, updates that are not a full program. But I'm going to give it to you straight. I'm going to give it to you, I hope, with some peace and with some objectivity. How many say that the Russian invasion is terrifying to watch? 84%. Well, of course it is. I showed a few pictures here because I do have to make sure that we all know, watching this show as a financial show, that the greatest harm and damage here is not our portfolios, but people's lives. Okay? But realizing that, sitting on a steady diet of watching these pictures is not a good idea, in my opinion. How many are overwhelmed facing with the world right now? The number of crises, 73%. Again, we've been here before. How many say they're worried it's going to lead to a nuclear war? 70%. I just don't think that's the case. And Leo, I know you're online here, but we talked about this today. I believe, and I think Leo would agree with me here, feel free to comment, Leo, that the Russian army leaders would step in before any bombs went off, because the Russians know that if they start flying nuclear bombs, even if it's just in Europe and not intercontinental that hit the U.S., Russia would be vaporized, and it would be the end of their existence. So I don't think that's going to happen. I know that there are enough Russians that don't like Vladimir Putin that are in these outlier countries that want to stay free. They speak Russian, as Leo and I talked about today, in Donetsk and places. They speak Russian, but that doesn't mean they want to be in Russia. They don't want to be controlled by the Putin regime. Okay? How many say we're at the beginning of World War II or World War III, I should say? 70%. I think that's high, guys. That doesn't happen unless the Baltic states are invaded. I don't see it happening. I could be wrong. Okay, let me check here from Leo. Good guess. You got it too. Greg, Caterpillar. This carnage is unimaginable. Yeah. So both Leo and Andre have family and are from this part of the world. So confirmation that George Friedman. So just a little plug here. Both Leo and I read this fellow George Friedman, Geopolitical Futures. I don't get any compensation for this, but if you really want to keep up with what's going on, I think they have a tiered level of membership, but it's all of a sudden now this is in the forefront. So that's something you may want to check out, Geopolitical Futures. You'll see them in my footnotes. So the week's biggest duh statement: we must become independent from Russian oil, coal, and gas. The European Commission president. What took you so long? I said that earlier. Angela Merkel should have stepped up and done it years ago, right after the Crimea invasion. So I'm sure you've seen this in the news. Many U.S. companies have temporarily ceased operations. Maybe it's permanent. I couldn't even fit any more logos on the screen. I could have done it on and on and on. The unanimity in corporate America. And I'm seeing this even in Congress, the resolutions that are being passed. You're seeing those on the left and those on the right unite, much like we did as Americans after 9/11. Now, that was on our soil. This isn't on our soil. And we're still uniting. And I think it shows the deep level of empathy that we have as Americans for our fellow world citizens whenever a bully steps in. And we just all want to see this man taken out. We just do. All right, I'm going to pause just for a second, get a sip of water, and check the stream here, and then we'll go into the market update. All right. Leo, Russian generals and oligarchs have enough self-preservation that they don't want to be obliterated. And I think that's the case. They have too much money to enjoy. I don't know if you know this, but Bill O'Reilly has done research that he believes that Vladimir Putin is worth somewhere between $300 and $500 billion. He has a $1 billion, 300-acre, getaway, I guess, near Siberia. But basically from all the money that he's stolen from his people. On the side, it would be the end of life on Earth because of nuclear winter, and that could well be, Dr. J. I hope we never find out. And I like your S words, Tom. Shameless, sinful, saddening, senseless, psychopathic. How about that? There's a fifth one. Nixon said the U.S. should move away from fossil fuels. I understand that, Doc. I got a slide that Dr. J sent me, and I'm going to use it in here in just a little bit. It just can't be done overnight. So we'll get to that. All right. So let's look at the market. Guys, here are the largest declines. I took off the 2020 decline. But what do you see on this chart? So we're going all the way back to 1870. These are market pullbacks. But notice after every single one, we do go on to make new highs. Okay. We do go on to make new highs. And that's what I want to show you just chart after chart here. We have had a 22 or 21.1% pullback in the NASDAQ. All right, go back to April of 2020. 2 years ago, actually, that's March 23rd. That was the low of the market. And we are approaching that in 2 weeks. Won't that be interesting? The market low of the last downturn. It'll be interesting to see if we go below that. I can't imagine that we will, but that's the percentage drawdown. So that's actually not a fixed dollar number. That's a percentage drawdown, but we continue to recover. You can look up at the chart past April 2020 or March 23rd, 2020 and see we fully recovered and went on to new highs. Again, you can't see all the numbers on here, but the point is one day after a major event, all these markets are red. 1 year later, it's all green. 3 years later, it's all green. Again, don't try to read the numbers. What's the point I'm trying to make? Recency bias. I must use that word every show. Recency bias is the tendency to think that whatever's happening in our lives is happening at this moment, and it's the most important thing, and this is the future for us at this moment. Like the markets are going to be down, the world's always going to be in a war, and it's just not. In fact, virtually no one on this call has known a constant stream of war. There have been skirmishes, yes, but we did not live through World War II. All right. Could this be another one? It could be, but I'm with Leo here. I'm looking at your comment. Leo, the world survived Cuban Missile Crisis, Hungary, 1956, Prague, 1968, Afghanistan, 79 to 89 without nukes. And I said earlier in my show, I think it's going to be over in a few weeks. And I'm getting some of that from Geopolitical Futures, George Friedman, and Leo as well. Multiple ways to lower emissions and still cleverly use fossil fuels. So Leo and Dr. J are going to get in some dialogue here. We need an all-of-the-above approach with energy, not just windmills. I get that. I totally get that, guys. So intra-year decline. So what happens when we have a decline? Again, if you can't see the numbers, it's okay. Look at the orange. Those are downturns in the year. The black part above that is where the year finished in the market. I didn't put the years on here because it's just too much data to see. But what's the point? The point is, on rare occasion, you can see that, and you can guess that's 2008, the really deep orange line. And yes, it finished negative for the year. But the next year, 2009, it was down 27% and it finished up 27%. Okay, so this is an aid to help you not be startled and plagued by recency bias. This is the hard data. What you're going through right now in our accounts feels awful and feels like it's the end of the world. Folks, it's less than half of the downturn that we had in that 5-week period from February 19th to March 23rd, 2 years ago. At least it is so far, and we'll see what happens there. Okay? So this correction, I'm showing this is what happens. Do you see the parallel lines here? That's called a channel, and it's a negative channel. It's a downward channel. It's a bearish channel. We are possibly going to have a cyclical bear market. I mentioned this on my last show. I mentioned it in my last update 2 weeks ago. We are in a secular bull market. A secular bull market means multiple business cycles. I've expressed to you, my firm belief is that a secular bull market generally runs historically in the U.S. more than 20 years. We are 10 years into this. And in fact, the secular bull market that started in 1980 and ended with the crash in 2000 had a cyclical bear market in 1990 and 91. Anybody remember what happened there? I guess I could wait for 25 seconds, but yes, that was when Saddam Hussein invaded Kuwait, and that did lead to a cyclical bear market, but it did not stop the secular bull market. Okay, so when you see chart patterns like this does not mean the market's going to zero or it's another Great Depression. It's just not. Even in positive years for the S&P 500, on average, the index experiences a maximum peak to trough decline of 11%. This year's is about 12.3. Now, we got a lot of help yesterday with that huge update. But it's tough to watch. We're still below the main moving averages, and we still got a lot to dig out of. And you can look at your account values and see if that's the case. So after a correction of 10 to 15%, the index, meaning the S&P, experiences an average 1-year gain off the lows of 22%. And this has happened 12 of 13 one-year periods after a correction. That's a pretty good track record, folks. The average stock market gain after 1 year from the first Fed rate hike. We're all concerned about the first Fed rate hike, which maybe or maybe will not happen at this next meeting next week. Okay? So these gains, the past 8 cycles dating back to 1983, we've still seen up markets. Been about 11% after the first rate cut. So the number one question that I get from clients and viewers on my show, when the markets go down, why don't I just go to cash until the downturn is over and then reinvest when the market turns back up? Sounds like a great idea. How do you know when that's going to be? And that's the tough part. Power users, this is the slide to grab with a screen capture. This is the one you need to put on your mirror, do a screenshot, print it on your printer, cut around it, paste it up on your mirror when you're putting your makeup on or you're shaving. $10,000 invested since January 3rd, 2000. The annualized performance, if you're fully invested the whole time, 22 years, 6.06%. Doesn't sound like a lot, but that doesn't mean that you're not trying to be more strategic. That's just putting it in the market. We obviously try to be more strategic than that. What if you miss the 10 best days because you were in cash? Because you were waiting for the market to correct, and you miss a March 24th, 25th, 26th. Go back and look at those days 2 years ago. When the big market players realize the last seller has sold, there's nobody left but buyers. What's the lowest day of a market move? When the last seller has sold, and there's nothing left but buyers, and they're stepping all over each other to buy. You miss those 10 days, you're down to 2.5%. Miss the 20 best days in that 20-year period, and you're breaking even. And if you miss the 30, 40, 50, or 60 best days, youch, you're negative. It's hard for me to take that kind of risk with your money. Now, do I rotate into less aggressive stocks? Yes. Will I on occasion go to cash? If we are in a secular bear market, which we were from 2008 to 2009, Lehman Brothers crash, those of you that were clients back then, remember, we had as much as 38%, I think, cash in our portfolios for a number of weeks. Okay, maybe even a number of months. I have to go back and check. But that was a rare occasion. We're now, 14 years from that. We are still in a secular bull market, and I will not be having significant cash unless that trend is broken. So what's the S&P response to geopolitical events? All this sounds great, Charlie, but this is a war. This is different. Okay, the attack on Pearl Harbor. It took 307 days for the market to recover. Iraq invades Kuwait. We just talked about that in 1990. It took 189 days. Okay, you can see the various events here that happened. Munich Olympics. I mean, most of us were alive for all of these days. I would venture to say everybody on the call was. Okay, some of us were very young. Hungarian uprising. All right, it does happen. The market always comes back. There's the proof on the screen right there from the daily shot in S&P. Stock traders usually shrug off these military conflicts over time. Okay, Iraq, Kuwait, one-day change, only minus 1.2%. U.S., Afghanistan, you can see these are not big moves. Now, what's happening right now is you have this invasion with its uncertainty from a nuclear power. Okay, so that's obviously part of it. With the huge inflation data, with uncertainty in Washington, just massive acrimony, obviously, in Congress, and uncertainties there. So a lot of things are confluence, and the market has made an enormous run higher off the lows from March 23rd, 2020. So this is just a natural correction, but when you blend in the inflation numbers, which were nowhere near this bad in 2020, we didn't have inflation under the previous administration. Go back and look at the data. You may not like me saying that, but that's just the reality. We didn't have it. You add that and you add Putin to the mix, and that's why this could take just a little bit longer than the days that I showed you. So this is the part of the show where I remind everyone that these downturns are typical. The great news is we always come back month after year after decade. That's just the way it is since 1870, when the first stocks were traded on the New York Stock Exchange. A little bit of good news. Those of you that are in CG, we got the news. Thanks for one of our viewers mentioning this. I had seen it, but I'm glad when you guys reach out and tell me this stuff because it's good news. Why? First time that Amazon has split their stock since 1999. Since 1999, they're up 4,500%. The reason to split a stock, I mean, it's just a math problem, right? So, instead of having one share, you get 19 more shares. You have 20 shares at 1/20th of the value. But the reality is it makes it more affordable for smaller hedge funds, for smaller industrial or institutional funds. And it just has the perception that even retail players can come in and be part of it. So this is a positive and bullish for the long term. So as I said earlier, I just want to drive this home. This is a cyclical bear market, not a secular. Study history and ignore CNBC. I don't know how those guys get paid to do what they do. I really don't know. The sky is not falling. We're going to be fine. We are in a secular bull market. I'll be pointing this out month after month and on my interim reports as well. Okay. We may have to deal with this longer than I thought. I was hopeful that we'd be done with this by the end of the second quarter. It may take until autumn, but I do believe we will finish possibly unchanged for the year, maybe even a little bit higher. We're not going to have an 18% return this year. Now, I showed this to you in last month's video. We have a 27% return in 19. We had 20% in 20. And that was after the market was way down, 38%, right? And then last year, 25 something, I think. You just can't do this year after year after year because at some point, there's so many buyers, there are no more buyers. What happens when there are no more buyers? Just the opposite of what happens when there's no more sellers. If there are no more buyers, then there's nothing but sellers. Cyclical bear markets tend to last 3 to 6 months. Few have lasted a little bit longer. And you're starting to see the R word, recession. I'm not covering that in this episode because it's not time. We'll talk about that in April's issue, though, okay? So last Friday was actually the 65th anniversary of the S&P 500. So the Dow is, the oldest index. But the S&P 500 is really the best proxy because why? There's 500 stocks instead of 30, all right? And 65 years, it's kicked you know what. My mom taught me not to say that word, so I'm not going to. You can see the recessions. You can see the bear markets in yellow. And yes, the market tends to go down during those times, but it comes back, usually because there's so much pent-up money on the sideline that buyers want to come in and purchase. So why is this going to be any different? It's not. What we don't know is, are we entering that orange bar, and how wide is it going to be? Again, don't let recency bias fool you or get you all in a stir, okay? Length of historical bear markets. February to March 2020, that was the shortest one, okay? 1.1 months, astounding. 1937 to 1942, 62 months, that's over 5 years. So much has changed then. That really is an anomaly, shouldn't even be calculated. And of course, the Fed's influence in the monetary system with M1, M2, M3 policy, I don't see anything happening like 1949, 1929, 1932 again. I just don't think it's likely. So could we have a 20-month bear market? We could. I don't see it. I don't see the signs now. I continue to see good data from U.S. companies right here on the screen. You guys remember, if you've watched my show, that the magic number, or I should say not the magic number, but the mean, the average number here is 76% of S&P 500 companies beat their earnings forecast. Right now, with 7 companies left to report, you can see in the bottom there, 7 left because we're getting very near the end of the first quarter, which of course is reporting earnings from the fourth quarter of last year. We're still ahead by 3%, even with everything that's happening now. Now, will this war affect what happens as far as goods, services being exchanged in the first quarter of this year? Because obviously on April 1st, we're going to start looking back to this first quarter. It could. We're not going to guess on that. We're going to follow it very closely. But right now, it's still positive. So this is the performance of the programs. First time in 5 years, I'm lagging the S&P by 0.4%. We've consistently led it. We are a growth-driven entity. I am not concerned about this. You might be if you've looked at your accounts, but guys, it's recency bias. We have a history of outperforming the S&P in capital growth, strategic growth. Diversified growth and growth in income are our more conservative programs for people that want to take income on a regular basis or just can't stomach the volatility of our growth programs. But this is what we do, okay? And we will continue to go at it. I'm going to get a sip of water here and look in the chat. But here's what we got to take away. Lowered expectations for 2022. Maybe even the first part of 2023. But after that, I really think it's strong sailing. We've got to get through these items that I've mentioned in this program tonight, a lot of which, virtually everything of which is out of our control, especially as regards to Russia. We'll see how much the rest of the world stands up here. I mean, you know, when people finally stand up to a bully, he pretty much walks away with his tail between his legs. We'll see if that happens this time. I'm going to get a sip of water and take a look at the questions. All right. I agree with you, Andre, on the outpouring from all across the world, from Australia to Western Europe to the U.S., to Canada, Mexico. And I mentioned earlier, Leo, your comments about surviving all these different crises. All of these happened in my lifetime. I was born in 1955. And we will see as far as whether we're going to be able to diversify away from a pure reliance on fossil fuels. But it's going to take time. It's definitely going to take time. So the world economy, guys, I'm going to try to get this in, but hang with me, okay? So the employment scenario, I mean, believe it or not, we still have an employment report last week. Our unemployment rate dropped from 5.7. You know, and this is the U6 number, so the headline number is more like 3.7, but this is the underemployment number, and we're still lower than most everywhere else in the world. I think it's encouraging to see that. The Fed report came in above consensus, but it's kind of a joke because they have missed by hundreds of thousands of jobs, both to the upside and to the downside. Again, because of the volatility and unexpected performance, there's so many people that have stepped out of the job market. There are jobs that are just going wanting. The job ratio of available jobs to the number of workers is at an all-time high. There are way more jobs than there are workers, the exact opposite of what would be in a recession. Okay, so 304,000 workers came back, and that's good, finally. But what we're seeing here is wage growth is finally kicking in. Look at that spike. This is from the Atlanta Fed. So we need to see wage growth keep up with what's obviously happening on the inflation front. Because if wages were flat or receding, part of the reason wages are increasing is because there's so much demand for workers, and part of it is because you're not going to be able to get anybody to work for you unless you can, assure them that their wages are going to keep up with or exceed what inflation is. So help wanted, look at the spike in the number of unemployed. Okay, openings versus, the job numbers just keep rising. Job openings, I should say, just keep rising. Unemployed, the quit rate is just huge because people are quitting jobs. Workers finally have more even footing here with employers because they're able to demand wages that they want and whether they want to work from home, okay, and other ancillary benefits. Workers have more power than they have in years. So the opening rates by industry and quit rates, both of these are rising. So the number of job openings and the number of quits. Someone will try a job, they don't like it, they quit 3 weeks later. And they'll go to the next place because they know so many companies across in multiple industries are hungry for talented, driven people. It is a great time to be an employee, to be able to call your shots, more than any other time I've seen in my lifetime. So desperate for workers, companies are literally putting help wanted ads on TV, making it desirable and sexy to flip pizzas, and $22.50 an hour to start, and college education, and probably a car rental, on the company. I'm making this up, of course, but the demand for labor is higher than it's ever been in my lifetime. Inflation, inescapable here. Before I start, I want to address, hey, Hussein, good to see you. China announced today that it will reduce its oil purchase from Russia. Well, it's about time. Earlier in the presentation, you saw that China is the number one customer for Russian oil. That would really put a hurt on them if China would, get oil from somewhere else, say Saudi Arabia or Kuwait, even Iraq. All right. I hope that happens. It's good to point that out. Thank you, Hussein. So gasoline prices, just crazy. And I actually had, for the very first time in my life, what I call a three-handle automobile refueling. $105.46 it cost to fill my car this past weekend. I have a 24-gallon tank, and I've never seen a 105.46. So my wife and I are getting ready to go to Baltimore to see my daughter. We're going to drive because, frankly, I just don't trust the airlines now. So if you're watching, Meredith, that's how much we love you. We're probably going to need to take out a home equity line of credit to pay for the gas to get to Baltimore and back, but you're worth it. But just realize that's what's going on. So I was sent this by one of our viewers. I think I credited him in the source. Since the Russian invasion, the cost to produce wind energy has gone up zero. I get that. Okay, so I'm going to use an example that the person who gave me this will understand. When I was in the recording business, some of you know that I have a music background, I started with a 4-track recorder, and then I went to an 8-track and a 24, but I didn't throw out the 4 and the 8 when I went to 24 because I couldn't transition. People weren't ready to pay for the higher cost of more tracks in recording studios. So each of those improvements or upgrades required a transition period. And that's common in multiple industries, okay? And it's not any more, couldn't be any more relevant than here in the energy sector. When we are able to reliably fuel cars, refuel cars, we don't have charging stations. I don't want to drive to Baltimore and then have to stop 45 minutes 4 times to recharge my car. I mean, there has to be a way around this. And obviously, if the windmill situation had worked brilliantly in Texas, they wouldn't have had that freeze where it was just a massive problem last summer. I am all for wind energy and solar energy And I think eventually, as the technology gets better, it will, I don't know if it'll ever totally supplant, but it will supplement to a greater degree than it is now. So I'm all for it, but not at the expense of national security or even substantial convenience, okay? So gas lines, why might we be looking for these again? Those of you, again, that are watching this probably remember the gas lines in the 70s and 80s. Look at the red shaded areas. This is where gas hit all-time highs, and basically we were waiting in line. I remember doing it. I haven't had to wait in line here. I think mainly people are just staying home because so much of our society now can be conducted from our homes. Although I understand that it's making it tougher and tougher to get an Uber because they can't justify driving at the current rate. So we're probably going to see an Uber ride go up, a $15 Uber ride be $28 the next time we get in the car. I like this comic, again, sent by one of our viewers. Back in 1952, gasoline cost 20 cents. I actually remember paying 18 cents in my Ford Galaxy when I was first driving. So I would have been 1971, right? And they used to come out and clean your car and check your tires. And the son or the grandson says, this is what they call senility. Well, if you're not used to it, it probably seems senile. So good question here from Leo. How are you going to dispose of Li-ion batteries? They're extremely toxic. That's over my head, Leo, but I'm hoping somebody else will respond. All these are good questions. I think energy will be an ongoing topic on our program. So price pressures, if you guys are doing a second screenshot, you captured what happens when you don't stay invested in the market. I hope you stayed it. You're going to print it, put it on your bathroom window or wherever your refrigerator, right? But this is also positive. This is from, a trusted source here that the forecast for inflation is not just going up, 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 up. Actually, multiple sources are expecting this inflation. We're going to get one more bad report. So the March report from last year, remember, it's all on a trailing year. All right. And so in April, they're going to show the March CPI. And it's also going to be bad. But starting then, this is the peak that you see here. You're going to see us getting to the end of the year back to about 3%. Now, the target is 2, but for years it was 3. I don't think we're going to get to 3. I think it's going to be like 4, 4.25. But then that means in 2023, we can get down to a more reasonable number. I do think that's possible. Obviously, the impact of a 10% price hike doesn't affect many of us on this call, but for the people in the lowest 10% of income brackets, those are the ones that are really hurt by this. And we can discuss, ad infinitum on what the U.S. needs to do to fix this problem. The state of Alaska alone could provide all the oil that we need in this country. And if you don't believe me, search it. The state of Alaska, not even counting the Bakken in Minnesota, or Cushing, or the other places in the Southwest, Oklahoma. All right? There's no reason why we are not completely self-energy sufficient. All right? This is another graph of inflation dropping, assuming that this CPI level remains unchanged. We don't know what the war's contribution to this is going to be because we don't know how long the war is going to be. But I expect to see through the end of the year, this particular company, Oxford Economics, is saying 4%. I think it's going to be between 3 and 4% by the end of the year. I'm very pleased that the COVID section just has a funny line here. You want to see social distancing, loan somebody some money, and a great chart that just shows, plummeting number of cases, plummeting number of deaths. At least we're not having to handle, a ramping up of COVID in addition to everything else. On the political front, this is just my own comment here. We import 595,000 barrels of oil a day from Russia. That has stopped, of course. Keystone XL, realize the XL is different than the just Keystone, would produce 830,000 barrels coming from Canada to be refined in the Southwest states, Louisiana, Alabama, Texas. Relying on Russian oil is a choice, and it's a stupid one, all right? And I'm glad to see that we're no longer buying it, and I hope we never, ever buy a single barrel of oil from Russia again. That's what I wish were policy. Economic indicators. Now, those of you that are new to the show, I normally spend more time on this, but we're already at an hour. So GDP, I need to cover. We're still looking at when the final revision comes in for GDP for the first quarter, about 5 to 5.25%, which is a good number. I do not expect 2022 to match that. It maybe is 2 to 3%. Obviously, if it gets much lower than that and we have inflation, then that's when we have a recession risk, but I don't think we're there yet. Let's see how long this war takes to get done here. Real GDP percent change from preceding quarter. So we're going along. We had this massive drop in 2020, massive increase when we pulled out of it. It's been pretty steady since then. I expect that to continue. Wells Fargo, one of the largest banks in the country, forecasting robust growth. This graph actually was issued a month or so ago, so before the invasion. I haven't seen their updated projections since then, but I think it's still going to be this strong. I think 22 and 23 are going to be good years, not outstanding. Here's the risk, and I don't want to just, pretend that I'm only just going to give you rose-colored glasses here. If consumer discretionary spending drops off, there's our risk. There are three components in GDP. There's the consumer, there's government spending, and there's corporate spending. Of the three, by far, the most important is consumer spending. We are a consumer nation. What a surprise. 67.5% roughly of every dollar of GDP is driven by consumer spending. And if consumers get scared of inflation, of the war, of gas prices, all the above, this could affect how they spend their discretionary. I'm not talking about toilet paper and oatmeal and the things that they have to live, but their discretionary spending. All right, if that falls off, and we will be watching that in the subsequent quarters of this year. As far as the Fed, the only thing that matters is, what are we expecting? 50 basis points or 25? I'm hearing some people say now the Fed might not even do anything next week. All right, they had been talking 50 basis points for a long time. Jay Powell backed away from that in his most recent interview with Congress. This was just earlier this week. So I think it's going to be 25 basis points or nothing. All right. That's what it should be. All right. So what happens? Do we go into turmoil once we start tightening? No. Look at the average annualized return of the market once the Fed starts a rate cycle increase. Those look like positive numbers, guys, except for 1972, 1974. This gets to the essence of why I do these programs. If you listen to the media, they want your eyeballs. They want you watching them. They want to stoke the fear so that you watch them so they can claim you in their Nielsen ratings. I'm trying to give you the truth so that with everything going on, you can be confident that you're going to wake up tomorrow. It's going to be a good life. We're going to work hard. We're going to care for others. We're going to have empathy for those that are being oppressed. And God's going to bless this country. You may not agree with me on that, but that's my perspective. That's how I manage the money. That for those of you that are clients watching this, that's how I take every day. That's the mindset that I take for every day. Okay. U.S. housing market, again, almost done, guys. I got this comic again from one of our viewers. Dr. J got 3 mentions in this show. So he's, holding the door down. I told you should have listed it for more. That's still here the case in Nashville. I mean, I don't know if it is where you guys are living, but, real estate was just a sleeper asset class, and it's not anymore. It's for real, for sure. So I like that comic. And this is the exodus. This is from another viewer, one of our Georgia viewers. The exodus, the little black dots here, leaving California, okay, going all over the place. Some even to New York, a bunch of people going to Nashville, but South Dakota, North Dakota, Montana, anywhere but California, IA. All right. This is about a month old data. And if they're not getting the message out there, Gavin Newsom and company, you guys never will. Dummies. That's the show, guys. Covered a lot here. Again, those of you that are watching for the first time, normally we sort of divide the categories a little more evenly, but it was so important tonight to cover what's going on in the Ukraine, the humanitarian side of it, and certainly the economic side of it, because this is a financial program and it does affect your portfolios. Please know that I'm on it. That's what you guys pay me to do. That's why I'm here. Our next live show, because there are 5 Thursdays in March, will be Thursday, April 14th. That's 5 weeks from now. I'm guessing I'll have 1, maybe 2 CB3 Live updates. In the meantime, I'm going to check the message board. If you've got a question, start typing, guys. One reason in my electric car is the lack of charging stations. Yeah, exactly, Doc. I buy a plug-in when I see more charging stations. Yeah, and I think the next move for us, and this is just me, we tend to buy cars every 4 years. We'll keep this diesel. We'll keep this, petrol car that we have for long trips, but we might have an electric car. Might have an electric car to zoom around the area here. So cars for different purposes, but if it's going to be the main car, then you just have to take the other car on trips, right? But if you live in a rural area, I don't know if you can do that. I guess you have to figure it out. So the wind in Texas storm was only about 10% of the electrical supply. I understand. Rest of missing power came from failures in conventional fossil. I think there were a lot of issues that happened then. But good catch, Doc. I probably shouldn't have used that example. So, guys, I always end with this from 2 Timothy 1:7. For we have not been given a spirit of fear. We have been given a spirit of power, love, and a sound mind. We are so blessed in this country. We really have to be careful not to take it for granted. God has richly blessed us with commonalities, language, short heredity. We've only been around 230 some years, right? So it's pretty easy to trace our history, and there are some advantages to that. We don't have hundreds of years of border battles that I showed you early in the program. We have huge natural resources. And I just believe that the people in this country are fair-minded, noble people, and that they want the best for themselves, for their families, and for their fellow citizens of this world. So I give thanks every day to God for being an American citizen and having the right to do what I do, which is to encourage you guys every second Thursday of the month that the world is going to be fine, your investments are going to be fine, we're going to get through this. If you ever have a need to call, you know how to reach me. My email is cb3@cb3.com. All my phone numbers are on the website. I pretty much sleep with my phone. If you need to reach me, you have a question, whether you're a client or not, give me a call, shoot me an email. At CB3 Financial, we don't just manage your assets, we become one of them. Thanks for watching. God bless. See you next time.